Are emerging markets flagging? This is the opinion of some analysts, but joining me down the line to give his perspective and discuss the Mexican economy in particular is John Welch, macro strategist with CIBC World Markets. John, there has been the suggestion that Mexico is competing with Brazil to become the economic darling of Latin America and is challenging China in manufacturing prowess. But do you think this optimism is warranted?
Yes, I think so. I think Mexico has sort of surpassed Brazil as the darling, not only because of the good prospects for Mexico, but for the not so good ones in Brazil. And it's a number of reasons. They were trampled on in the 2008-2009 crisis, but they've come out of it well, and they didn't do anything extreme. They didn't expand fiscally in any extreme way. The fiscal situation is good, and you're starting to see pretty good recovery based on domestic demand. There's a couple other reasons too. Number one, the prospects of some more structural reform, especially the really hard ones, are pretty good. I wouldn't say that it's easy, certainly not. Changing the constitution around energy, especially allowing Pemex to go into risk contracts, is a very difficult endeavor, and it's laden with lots of historical imagery. But I think this is the best prospects we've seen. They kind of have to do it if they want to continue being an oil exporter. And the government depends upon oil revenues, so they'll have to do a complementary fiscal reform, tax reform, that not only allows for a different tax regime for Pemex, but also substitutes normal regular type revenues for the revenues they were getting on the oil side. The other things that are on the slate that they've already passed are actually pretty good, especially in terms of telephony. So there's momentum there, but it's certainly not going to be a walk in the park, because these reforms are very, very difficult. But still, things look pretty good for Mexico right now.
On March the 8th, the central bank cut interest rates to a record low of 4%, and many investors believe it will do again by July. However, the initial cut did come as a bit of a surprise to other investors. Do you think it was a necessary step by the central bank?
I think they felt that they were certain that it was fairly safe to do that, number one. And I think it is safe. I'm a little puzzled as to why they did it. I don't think they really needed to. But it was safety, and they can undo it quite easily. I don't think there's a major risk involved in terms of inflation, because the fiscal side is in quite good shape. So if we had a different situation like Brazil, where you have a loosening fiscal policy and probably overly loose monetary policy, they're facing an inflation problem, but Mexico is not. I don't know if they're going to cut again. I'm still, again, puzzled. They're having a problem with their home builders, and they've had a sort of mini subprime crisis. This doesn't really help that sector, because there's negative cash flows, and it doesn't really matter what your discount rate is when you have a negative cash flow. But that may also be part of the reasoning behind this. I do think they'll have to rethink this, especially as the United States gets closer to moving on, at least not moving against easing so much on monetary policy, I suppose.
In terms of yesterday, EM stocks tumbled the most in 10 months, and currencies depreciated as disappointing Chinese manufacturing data and speculation the Federal Reserve will scale back stimulus cut demand for riskier assets. Now, despite the fact investors knew the tapering off would happen at some point, and Bernanke still hasn't specified a particular deadline, do you think it will have a significant impact long term with regards to increase in risk aversion?
I don't think this is really a pure risk situation, especially since before, when people were worried about risk, they bought gold, and now they're selling it. I think there's some uncertainty involved, especially with China, because the underlying data, like electricity consumption, et cetera, has been weaker than the headline, both the headline GDP and now industrial production, was the industrial production numbers. So there's something going on there, and certainly we've seen it in numbers in the countries most affected in Latin America by China, that is Chile, Colombia, Peru, Brazil. They have, in part of their export sector, you're really starting to see slowing, and the only sort of common explanation we can come up with is China. So China's slowing. It's not a disastrous slowing, but the market doesn't really know how much it is, because it's rather opaque in terms of the data. So usually when the market doesn't know the extent of something or something precisely, it tends to overreact. I also think that it's overreacting with respect to what Chairman Bernanke said yesterday. Certainly his statement was not any less dovish than what we've seen recently. And then he was asked a bunch of hypotheticals, and he was trying to give some guidance in terms of contingent moves. But there were a couple things he'd never said before, and I think that's what got people moving. I think at some point the strength in these currencies was going to unwind a bit, and basically on the back of maybe weaker commodities prices. But I think it's a bit overdone at this point. And perhaps there's a little risk involved, just generated by the volatility or risk aversion. But I don't think it's overall that way. After all, the fear of U.S. tapering is the fear that the U.S. economy is doing well enough that they can do it. And that's a good thing.
According to some investors, the two EM currencies most frequently cited as favourites to own at the recent Euromoney Forum were the Indian rupee and the Mexican peso. Therefore, both are particularly vulnerable now. But what is your outlook for the peso over the next 6 months, John?
Well, my guess, I guess it's an educated guess because I use econometrics, but my guess for fair value for a dollar MEX is about $12.25 at this point. And if you get the reforms done this year, that should also put a bit downward pressure on the dollar in Mexico and upward pressure on the peso, of course. But I don't. Other than these sort of strong gyrations, that really have to do a lot with very good liquidity in the currency. I don't really see any reason for it to get too far below that number 12.20, 12.25, nor too far above it. And I would recommend trading in a rather wide range. When we get really far outside of it, kind of like we are now, it makes sense to sell dollars in Mexico. And if we get back down below 12.10, 12.05, then it makes sense to buy dollars. But I think the prospects for the country are quite good. And because of that, it doesn't always translate one for one into currency moves, certainly. But I think there's probably good upside to the Mexican peso from where we are right now.
John, thank you very much for your insights. Well, that's all from me at the moment, but the TV team has plenty more to bring you before the trading week is over, so please do click back. Goodbye for now.